Good afternoon. I'm sure you've had a fantastic session so far for the past 2 days. We're going to be having some really interesting conversation. Maybe we'll just do a quick round of introduction before we delve right into it. So I'll start. So my name is EduAbasi Chukwunweike, and I manage the startup ecosystem for Microsoft across West and East Africa.
Hi, good to be here. My name is Bunmi, Akinyemiju, and managing partner for Greenhouse Capital. Thank you.
Hi, I'm Sam Wanjohi. I'm the founder of Popote Inc. We offer a solution called Popote Pay, which is a spend management and payables automation solution for businesses.
Hi, my name is Gerald Maithya. I'm the startup lead for Microsoft within the Africa Transformation Office.
All right, fantastic. We have one more person that I'm sure would join us shortly, but we'll just delve right into it. The focus of our conversation today is on something that we know is very important to the ecosystem: fundraising and market expansion. And I think our first question would go to Bunmi, right? So within the past two years, there's been an increase in funds that have come into the ecosystem. So when you look at the reports or you look at the numbers, when you think of last year or the penultimate year vis-a-vis now, it's more like there's a lot of investment coming into the ecosystem in the continent for the startups. And Bunmi, you're with Greenhouse. You have there's a Greenhouse Capital, and you've been in an ecosystem player in the continent for a while. What do you think has been the major driver of this?
Yeah, thank you very much for that question. Very good point. I think there's several factors. If you look year over year, right, and I think 2018, 2019, we're talking more like $1.5 billion, coming into the ecosystem. I think it increased, in 2020 to like 1.9, and then it jumped to 4 billion last year. I was looking at the numbers just like yesterday. Just as of now, in February, the numbers are astronomical already. If you gross it up to the year, we may end up at about 7-8 billion this year. And then I start asking myself, what's the factor? And I think there's a few things. Number one is the fact that, COVID happened. And I think because of COVID, the first is digital, became more ubiquitous. Right. So I think that's one. Two, because of COVID, people are doing due diligence on Zoom. So now that barrier of flying to Africa is now kind of gone. So I think that is also a factor. I think number three is if you look at the US, if you look at the UK, your returns are still 1%, 2%, and so on and so forth. But you see a company like Flutterwave that was started just, 4 or 5 years ago, $3 billion in valuation. So I think those stories are also becoming global. Right. Some of these US firms, they tested the water, and they're seeing that actually the growth is here. So for me, I think it's a combination of factors. Just several things are coming together from a positive standpoint. COVID helped to accelerate it. The conversation is now in the open, and the capital is coming in. I think the bigger question now is, can the quality of the entrepreneurs, the quality of the deals, and can everybody build sustainable business models? I think that's the question we must answer now.
Yes, I cannot even agree less. I think what we're tasking the continent now is the more the funds are coming in, the more we're sort of positioning to show that, yes, these funds are being channeled rightly. But to that, Gerald, the next question would pretty much go to you. From a technology standpoint, do you think technology has been an enabler for this fund that we've seen coming into the continent? If yes, how? If no, why?
Okay, thank you, I do. I think so. I think technology has been a key enabler, and the reason is very simple. So the problems that existed still exist over time. I think COVID brought out a big opportunity, it might have been seen as a challenge, but a big opportunity in terms of solving solutions a lot faster and more efficiently. and you only get that through technology. So I think technology will continue playing a big role, because what's being shown is we've got business models here in Africa that can actually be transported to other markets, and we can also get other models coming from other markets like India or Latin America that have similar landscapes that can actually work here. And that can only be done because of technology. So you have more efficient ways of doing it. You've got a whole leapfrog of opportunity that technology allows. And then it's all about the customers as well, having the ability to be able to adopt and enjoy those services in a very different manner. So technology, I think, plays a big role, and will continue playing a big role as these companies expand.
Great, thank you. So then, Sam, my question to you would be around, I think I like this question because you've been Popote, your company Popote has been a beneficiary of the funds that have come into the continent. So I would like to sort of hear from you on what would be a sum up of your experience. How did you even, because I know there are a lot of startups here that are sort of trying to have access to this fund, trying to benefit. There's, okay, you know, there are a lot of VCs in the continent and there's a lot of angel investors, but what would be the advice you would give to startups on how do you go about this?
All right, thank you so much, Edu. Yeah, so as Bunmi correctly said, it's certainly just become a lot easier. So a couple of years ago, you know, technology investing was something that a lot of local Kenyans or Africans were not really looking to. Now that is happening, so very early stage companies can potentially raise pre-seed rounds or seed rounds from local networks, and locals are sort of coming together and bundling themselves into loose sort of networks, not really funds, that look at opportunities as and when they're presented. Yeah, I'd just say encourage startups that it is just that much easier now, and then there's at least some kind of pipeline that is being created, so you can actually have a visibility as a startup that if I hit this sort of annual revenue rate, then these are the sort of investors that I'm going to get conversations with, and thereafter and thereafter. So there's sort of a value chain that's developing that certainly was not there before. And yeah, it's really encouraging, and we just really want to see some of those exits happening that will just convince more and more people, even just networks, because I think unfortunately at the moment the funds that are coming with a lot of money, their LPs are still all foreign. Right. So we really do not have funds that, especially in Kenya, that Kenyans are investing in. I understand Nigeria is a little bit different. They've sort of crossed that milestone. So yeah, it's just getting easier and it's more encouraging, and I think the future is bright. Great.
And maybe just me punching a bit deeper into that, when I hear you say, you know, there's a whole lot of value chain now where people can have access to the fund. If a startup was to sort of ask, like, where is this value chain? Like, everyone is saying there is, how can I have access to it? I mean, just because you've been a beneficiary of it, are there tips and nuggets that you want to, that you would like to share?
Yeah, so the funny thing is, I guess it's a multi-level problem. So my problem is not as big as it was earlier, yet right. My problems are huge compared to some larger startups, right? Right. So I can only talk from my stage that, you know, by being open to networks and talking, coming to events like this, I mean, here, you know, there's lots of collaboration, meetings are happening, just connecting with the ecosystem. For us, one thing that was really great is also being part of the Microsoft for Africa program. And, you know, there are things like that, that actually came with grant funding to us in the early days. Right. And hopefully startups can reach the stage that investors find them, because, yeah, ultimately I really believe that it's not, it's the core business of investors to find startups, but it's not the core business of startups to look for investment. They need to be building their companies. So taking all that time that we do, hopefully is going to reduce when there's just enough, the ecosystem has been built enough that investors can come and find the good companies quite easily.
Right.
I think Edu would like to make a comment.
Yeah,
because
okay. I wanted to actually punch up, but please go ahead.
I'd like to make a comment because I agree with some, but I think it's also an opportunity for tech companies. If you just look at the tech landscape,
Right.
to help in connecting the dots between the supply and demand. So how do you connect the startups to those opportunities? How do you connect the startups to the investment ecosystem as well? And people like Microsoft or our other competitors in the continent have that opportunity to be able to connect the dots. And that's what we're doing with the Africa Transformation Office in our startup work, which I'll talk about more.
Great. So Bunmi, Sam said something. So he said, if I heard you correctly, that, and I actually do agree with you, that it's not the job of the startup to be looking for the investors. It's the investors that should be looking for the startup. So now you speaking as an investor, do you agree with him? And if you do, what is the channel that you think investors should put for startups to reach them easily? Or what's the channel, what's the value chain going to look like?
Yeah, no, very, very good question. I mean, I think answering this question in the context of Africa, Africa is still early days, still very, very early days. So what that means is that the clusters are not well formed yet. Right. The ecosystems are not well formed yet. You don't have, the maturity that you might have in some other, regions. So with that said, everybody has to work. Startups have to go around and hit the streets today to look for customers, tomorrow to look for investors, on Wednesday to look for partners, and then on Friday to go and look for staff.
Oh, wow.
And then Saturday, to work with your auditors, and then Sunday, literally, that's the life of an entrepreneur, and that's the life you chose to live. The beauty about it is that when we start to see the maturity in the ecosystem, then Sam is going to have his $100 million family office, and then he'll be telling the stories of when he used to hit the streets looking for investors and everything. So in a way, I feel like when you have the ecosystem and it's not very mature yet, it's inefficient. And what that means is that everybody has to work 5 times as hard, right? And it's just kind of the reality of it. The question is the person that works the hardest with some luck that then, gets to be able to make that connection. And we're seeing the pace of that connection accelerating significantly now, right? The number of deals every week right now is just mind-blowing. And at the same time, it's still early days. So it means that the future is going to be really, really exciting. But I still kind of go back to the fundamentals, which is, are you solving a big enough problem, right? And as you're solving that problem, are you also thinking about the potential scale?
Yes.
Because an investor is also going to fund you. If you're thinking, I'm selling my product to Nairobi, then you're going to get Nairobi money. If you're solving a problem for Kenya, you're going to get Kenya money. If you're solving an Africa problem, so I think the ambition and the scale of that ambition is very important, communicating it very well, and just hitting the pavement.
Right.
All these other founders that have raised money, are they your friends? Are you hanging out where they're hanging out, right? The corporates need to do a lot more. Microsoft is doing a lot, Google, Facebook. Banks are also trying to create some ecosystems, but it's not enough. And it's still early days. But I think the beauty is just the fact that the future is really going to be exciting. We can see the signs of that. And as a startup founder, one of my biggest advice when I talk about the scale of your ambition is about expansion. And I know that's one of the things we're talking about here.
We're going to delve right into
Yes,
it.
exactly,
We're going to delve right
exactly.
into it. Welcome, Debo. You want to just quickly give an introduction? Where we've been talking around the funding ecosystem in the continent and what has happened over the years and what the trend has been. If I may introduce Debo. Debo is the CEO of GetFunded. They're a consortium of VCs in the continent. So it's very interesting to sort of hear your own perspective on what has happened, right? Between a period of 2 years, we have sort of more than quadrupled our investment in the continent. What's been the major driver of it from your perspective?
Thank you so much. Hi. Okay.
Yeah.
So thanks a lot, Edu. Just a quick introduction, as Edu said, my name is Debo, and I am the CEO and co-founder of GetFundedAfrica. So essentially, GetFundedAfrica is a venture service firm, which is a coalition of almost 200 venture capital firms. So essentially, to the question itself of the ecosystem, I know you asked me about 2 years, but permit me to go 5 years back. Now, here's the funny thing. 5 years ago, total investment into African venture capital, into African startups, was just about $70 million. So if you think about it, just 5 years ago, 2015, 2016, thereabouts, total investment into Africa was $70 million thereabouts. Fast forward, as at the end of last year, total investment into African companies was just north of $4 billion, about $4.2 billion. According to our research team, the estimate is that this year, investment into African startups will be between $8 and $10 billion. Now, these investments, even though it sounds a lot, is actually just a drop in the bucket. Because the reality is that in Africa, there are many challenges. And because there are many challenges, you need many startups to solve these problems. And these startups need a lot of funding. The funny thing, and one of the reasons why we created GetFundedAfrica, is that on the one hand, you have massive amounts of capital. We're talking trillions of dollars of capital looking for a home. And there's a big gap between the startups that are growing, their understanding of how to tap into the venture capital space, and then the expectations that the venture capital firms have of those startups. Right. So the thing is, and it may sound like a misnomer, the money is actually there. It's looking for homes in startups. I believe that, you know, venture capital is almost like one of the makers of the modern world in many ways, because the venture capital space, or venture capital, if you think about it, the top 100 biggest companies in the world, 90% are venture capital backed. You could argue even 100%, because the only one company that is not VC backed is Saudi Aramco, which is supported by the Saudi government. So you could say the Saudi government is their own venture capital company. And so 100% really, arguably. Of the biggest companies, or of the top listed companies around the world, 80% of them are venture backed. Right. And so it means that in Africa, we need to be able to tap into venture capital to solve the problems that we have. Literally, every startup founder is a superhero, because especially here in Africa.
Clapping for you all the way.
Because
clapping for all the startup founders.
So if you're a startup founder, please, a round of applause for yourself. Because working and developing a startup, especially in Africa, is very challenging. And then you have that stress of building a company and then building it in a place that has limited infrastructure. It's a big deal. So for you to literally be able to go through that. And then fundraising becomes part of the problems. And once you even conquer fundraising, there's even the challenge of growing the business, getting people, overcoming infrastructure challenges, marketing, etc. So to both your questions, one, I think there's even more funding required.
Right. And
secondly, the ecosystem is growing rapidly, because just from a funding perspective, it's literally doubling every year. But putting it in perspective, the next closest continent in terms of fundraising is South America. And South America raised about 16 billion last year. So our 4 billion is huge.
So we have a long way to
but there's still a long way to go.
Yeah. Okay, so maybe before we just quickly round up on the funding bit of the conversation, we would sort of open it up to the room, the contributors. in the audience that you want to say something around the funding landscape of the continent, you have knowledge you want to share with us before we get into the market expansion bit of it. Okay. All right, so we'll just continue, right? I think in summary, I'd say it's exciting days. There's a lot of work for the startup, from being the entrepreneur, looking for the funding, looking for the market, but the excitement is that we're seeing more funds coming in. All right, so we'll talk about the market expansion bit of things, right? I think this is something that we, even as an organization, we've heard it over and over again across our startup ecosystem, be it those running a business-to-business model, B2C, B2B2C, something that everyone cares about. Every ecosystem player, be it a VC, be it an accelerator, or be it a startup itself, is how do I get more access to market? How do I get my product or my services out there? How can I be more, I know I'm solving real problem, but I need the customers. And so we would go right into Microsoft. Gerald. So Gerald, in your opinion, what do you think technology players like Microsoft and even others could do for the ecosystem to help the startup ecosystem? Because again, when we think of funding, the next thing you think about is, Bunmi had mentioned something, that the fund that is coming in, there's now also, shut up a better word, pressure on, we have to deliver. The startups have to show that they're successful. We're happy about the unicorns that are coming up, but we want to see more. And primarily, that is tied to access to more market. So what do you think technology players, technology enablers, or enablers of the ecosystem could do to, have those startups have a smooth selling or accessing a lot more around the market expansion there?
Okay. Thank you, Edu. And I'll build up on what was said before as well, given the structure of the ecosystem today. So I think the challenge that has come in was what are corporates doing? And corporates like Microsoft are in a unique position, given the scale that they have across the world or across Africa. For Microsoft, we've been in Africa for almost 30 years, since 1992, when our first office was opened in South Africa. But we are scaling up and opened up in most of the markets across Africa. So I can speak to what we're doing and what we're deliberately looking at, which is growing up to 10,000 startups in the next 5 years through deliberate interventions and investments. And those investments are seeking to help startups in accessing technology, accessing skilling, and accessing funding, but accessing funding in a different way. So there's a way that we're saying, given the fact that we can connect the dots, we have the ability and the credibility to connect the dots. We're working with venture capital firms to access up to $500 million of financing to tech startups that actually work with Microsoft. And that's going to be a huge catalyst for a lot of these startups. And then the last one we're doing is also skilling, which is a big place. And skilling comes in forms of getting the talent that is required, the engineering talent that is required to help some of those tech investments and startups scale up. We're also scaling with the startups for their value chain as well, and the ecosystem players. So there's a lot we're doing in that front, and we look forward to dealing with a lot of the startups here. One anecdote I would like to give is, I was speaking to the engineering teams. We've got 2 sources of engineering teams in Africa, in Nigeria and in Kenya. Okay. And one of the challenges that the engineering team is telling us is saying, please make sure you tell the startups in the conference, credits is things we can give easily, all the startups. Please bring us real problems for engineers to continue developing solutions for Africa. And that's a good challenge that I'd like to take on and work with startups to co-innovate on business models that we can actually transport and support across the world, not only in Africa.
Great. Yeah. Thank you. Thank you. The next interesting question comes to Bunmi, right? I like the role that Greenhouse plays, right? They play as a capital and they play as an accelerator. And I think this question, it delves more into the accelerator bit of things. So over the years, we've had a lot of startups go through your program, and I do know that the role greenhouse plays in the continent, you actually do help with market expansion. So I think for me it would really be around, as you have played this role over the years, obviously a lot of things have changed. You probably had started it one way and you realize it's not good enough, or what has changed over time, right? And what are the learnings? So even as the startups or the ecosystem players or people that are listening and are looking at how do I penetrate the market and do more, what are the tips you can give to them? Oh, we tried this, it didn't really work out, and then we started doing this and we saw it work, or we haven't even figured it out yet, it's also fine.
Yeah, thanks, Edu, for that question. Yeah, just going back to what I was saying earlier, right? You know, a lot of capital is coming in, you know, and when capital starts coming in, you kind of realize that access to capital now becomes not the big problem. The next big problem to solve is building a sustainable model that justifies the valuation for which you have collected money for. Now, to do that, you then have to think very, very deeply about access to market.
Right.
And so some of the work that Microsoft is doing, very, very, very important, right? And that's to your point. That's why we have an accelerator and we have Greenhouse. But even Greenhouse, as a fintech venture capital firm, we realize that we can't just give money. Capital is like not what entrepreneurs need. It's what they need, but it's like maybe 30% or 40% of it. What they actually need is sort of these market expansion rails. And what are those things? First, how do I get into more countries faster? And even if you go to like big companies, like InterSwitch, Cellulant, and some of the old school fintechs that's been around for a while, breaking into a new country is not easy, right? You have to learn the language, you have to hire a local, you have to, you know, think about what you centralize, what you not centralize. If you make a wrong decision there, you could break it, right? And so based on that, we now bring all these services and give that to startups that we invest in. So what are those services? Number one is, especially if you're in fintech, you need a license. So how do you kind of get that license? Who walks you through the process? You know, is it an EMI license, a PSP license, a microfinance bank license, and things like that? Secondly, is how do you set up locally in the fastest way?
Right.
Because especially in Africa, people don't like you to just come with a briefcase and say you've set up in this country. It usually doesn't work, right? So how do you set up locally, that office, that incorporation? And then there's 52 different laws. So who's going to interpret that for you? You're a startup, you know, and investors will also confuse you. They'll tell you, I want you to focus. I want you to focus. I want you to focus. That market you're in, win that market. Then tomorrow, they'll still come back and tell you, I want you to dream big. I want you to be across Africa and to be across MENA. And you're like, hey, what are you saying?
So you say we cannot focus and dream big at the same time?
It's confusing. It really is confusing.
Right, okay.
So I think, so what are the kind of lessons we've learned in the past? I'll just mention maybe 5. One is, as you treat every country like uniquely, differently, assume you know nothing, humble yourself, and go and learn from the locals, right? Even as a VC firm, when we expand to invest in a new market, I go there, I live there, I get an apartment there, I get residency there if it's possible, so they feel like I'm there, right? So that's one. 2 is that it's important to bring diversity. Don't bring in all foreign, you know, from your home country, mix it up very well. You know, that's very, very key. 3 is that when you are making that investment into a new market, you have to start from scratch almost in your thinking. Don't just copy paste, because when you copy paste, it could be like really, really dangerous. 4, if you're taking money from investors, try to get a mix of investors. Not all investors will just give you money and then show up at board meetings to ask you about results. You need some investors that are going to be helpful, hands-on, they've kind of, you know, done it before. And then the last one is really the fact that, you know, when you think about how much capital you're trying to raise, when you're thinking about what markets you're focused on, there's a lot of pre-work that you need to do. Not all markets are the same. If you're a Nigerian company, you want to go into Egypt. It's not just because you saw Egypt on the map. You know, what's the science behind it? What's the population? Similarities in culture, religion, all of those things matter. So it has to be scientific, you know, in some ways. Those are some of our experiences.
Thank you. Thank you. A lot of learning to take from there. So it's interesting that every market that you want to go into, you live there, you have an apartment, you have residency. Nice. Okay, so Debo, in your experience across the funding, how does market expansion impact funding rounds? So a startup saying, I want to go for a seed round of $2 million or $1 million. How does their market expansion strategy impact the funding round from what investors look out for?
So specific to Africa, slightly different from many other countries or many other parts of the world. On the continent, we have about 54 or 55, depending on who you ask, different countries on the continent. And just as you said, that means 54, 55 different laws and regulations to actually cover. But the reality is that if you can form the right partnerships, it then allows you to scale across countries based on learnings of other people, which even comes back to why I think Microsoft becomes even more important. Now, the trends that we have seen is that over the coming months and years, corporate venture capital or even corporate support becomes very, very important to the startup ecosystem.
Right.
So it means that a startup, say maybe here in Kenya, could, for example, partner with Microsoft, and Microsoft provides mentors, technical know-how, and people on the ground for that Kenyan company to expand to, say, Egypt or Nigeria, to give an example. So it comes back to what we said about the trends we're seeing, that corporate venture capital or corporate ventures become even more important to startups in growth, marketing, and expansion. So those startups that are able to cut, quote unquote, cut the right deals, ultimately will be winners. And now, because the African market is fragmented, typically more and more investments are going to go into companies that are able to aggregate those opportunities and enter into new markets based on partnerships that they have.
Right.
If I use GFA as an example, GetFundedAfrica as an example, because we have such a wide variety of venture capital partners who are looking for things in multiple countries, we've been able to gain experience now in 34 different African countries in a relatively short period of time. We would not have been able to do this if it was us literally going into each of those companies or each of those countries. So for marketing and expansion, I think the key thing is getting the right partners. And then because you're then able to get those partners that allow you to aggregate, the reality is that, I say this of venture capital. I said earlier on that venture capital is looking for a home. And if you have, the bigger your home, the more VCs you can accommodate. Okay. So basically, if you're in multiple countries, it does give that opportunity and more people would actually look at you and want to invest in you.
Interesting. Interesting. I think it's been an interesting view from everyone, but I would like to hear from Sam, who is a startup and is experiencing it. So while we're saying, okay, this is it, but Sam, in your experience, I know you've expanded across your primary market into a new market. What was that experience like for you? What made it easy for you, or what made it difficult? How long did it take? Could it have been easier? Do you think there are things that could have been in place and would make that journey smoother for another startup listening to you? But what are the learnings you can share from us as you have thought of as you've expanded and even as you think of further expansion?
Okay. So we're still in the relatively early stages of expansion, but I think we've learned a lot of lessons that we can share. So As Bunmi interestingly said, one thing is because investors can sometimes, he described this almost as schizophrenia in some way, can tell you this and then something else. It's important to understand that so that you can also have your own opinion and take theirs into account, so that you really form a strategy with the like-minded investors and hopefully you find those investors, because you might be pushed into expanding too early because it tells a story and you weren't quite ready. Maybe that stretches out your team. On the other side, you might leave it too late, and sometimes startups are also going to be pushed by other things going on. For instance, is there a rising competitor in a certain market and you feel you need to get there earlier than later, and maybe bring that into your plans earlier. So sitting as a startup, I'd also say there's many ways to look at this sort of expansion options. And of course, this is very specific to the type of startup. For us, we are completely cloud-based software as a service solution. So theoretically, deployment into any market is possible. It sits on the Microsoft cloud. If we can plug into the payment rails of any country, businesses can start using the solution pretty much straight away. So to talk maybe to companies in those sort of situations that are completely tech, I would say then partnerships are really important, because you could actually deploy into a market. In our case, we look to banks to say, can we deploy to your customer base, but we do not need feet on the ground. You could look to programs like Microsoft. They have something called the co-sell program, where they put your IP up and their account managers actually deliver the solution to clients. So that could be a great way to find one or two key clients in a new market and start serving them. And then you could also collaborate with other startups. So a lot of startups come under a sort of umbrella in a space like fintech, and you'll find investors like Greenhouse who are actually aggregating similar companies and fostering collaboration. So you could also find a startup that wants to expand, but as a startup, you have some infrastructure that would make it easier for that startup to expand. Yeah. In our case, a payment system that could work in any market. So you could also go with that startup as an anchor client. So I think there's many options that are specific to how you expand. The one I've not mentioned is, just fly to a country, as Bunmi said, and really understand it and put boots on the ground. So there are companies that also need to do that. So I think there's just so many options to consider. Right. And the partners and the sort of investors that you get to help you think through those decisions is really critical, because there are sometimes not decisions you could pull back on, or could be crazy expensive decisions if you do it a certain way, right, and it doesn't succeed, and then that could even harm your first market maybe, which at the same time was still relatively growing.
Right. Yeah. So I think right now I want to even thank you for that. Throw a question to Chahi. So there's the man Chahi in the crowd. So Sam said something. He talked about like the co-sell program. Chahi manages the Eastern South African part of the startup ecosystem for Microsoft, and I know that in his work he's helped a couple of startups to sort of expand into a new market. Chahi, do you want to sort of give us a lot more insight as to what did you notice that worked, or what do you think didn't quite work out, and what do you think the startups should take out of this conversation? Sorry for just throwing the question out. Yeah.
Thank you, and thank you, Edu. Can you hear me?
Yes, we can hear you.
So on this point, like on the geo-expansion part, what we've noticed is that the best way for startups to be able to geo-expand is through partners. So for example, you can be like with us, for example, at Microsoft, because we have an expansive network of partners, whether our conventional technical partners or VCs or accelerators in different countries, or even our customers. So through these partnerships, whether through customers, partners, VCs, accelerators, that's the best entry point for startups to go from one country to another, because it's specific. Like they know that, for example, a startup from Egypt could be entering Kenya through that specific customer, through that specific conventional Microsoft partner. And once they get their first customer, their second customer, and so on, it's then easier for them to expand them to go to new, like to other new customers in that country, and eventually maybe open up a headquarters or an office in that country. I don't know if this answered your question.
Yes, it does. It does. It does give a lot more insight. So if we have questions, please, we have questions in the crowd. Go ahead.
All right. Good morning, or is it good afternoon, everyone? Thank you so much for an exciting panel. My name is Chineye Nwanaka. I'm a lawyer and founder of the FEMA Advisory, and I'm also a co-founder of Africa Policy Conversations, which is a Pan-African think tank, and we support, policies that revolutionize sectors like tech and so on. So this question about capital, fundraising, access to capital, I'm very, very passionate about it because I work with a lot of startups. The law firm works with startups, and most times, you have people with brilliant ideas, but, they can't raise the necessary capital that is needed to scale their business. And most times when I talk to friends, who are VCs and all that, they always say that the problem is not access to finance, like people on the panel talked about. There's so much capital, the issue is finding the right type of businesses, deals, to investing. And I feel like it's a chicken and egg scenario because on one hand, you need money, you need capital to get your business to a certain extent where you can now have the structure in place to be able to raise that capital. So my question to the panelists is, how do we mobilize domestic capital on the continent? How do we get people to be more to be angel investors, to invest in more startups on the continent, because it's not everyone who will be able to go to Y Combinator or Techstars or, travel to the US or somewhere to raise funds. So there are people who are in Africa, for instance, in Nigeria, there's so many poor people who have brilliant ideas. And if we want to improve on financial inclusion and all that impact, how do we get, them to get those small, tickets, $10,000, $50,000, not necessarily millions of dollars? How do we mobilize that capital, basically? Thank you.
Happy to take that question because it's something I talk about on a regular basis. So to answer your question, first of all, we said there's lots of money and access to capital, but it's looking for a home. Why is it looking for a home? Because it's looking for specific types of businesses. Now, just to be clear, there's a difference between a startup and an SME. Sometimes people confuse that and call all startups SMEs or all SMEs startups. A startup is a company that is built for scale from the very beginning. Like Ab Initio, it's built for scale, or maybe it's even a service company that transforms their model, and that revised model is developed for scale. So essentially, investors, again, don't forget, VCs are firms, VCs typically are firms that have collected money from certain people, right, and have said, I'm going to take your funds and invest in ventures. We're going to invest in ventures that are going to grow rapidly. So unless they find a company or companies that are ready to grow or have a model to grow rapidly, they will not deploy funds to those companies. Right. So a VC is looking for startups and not SMEs. There are many service providers out there, but don't have the model for rapid growth. Now, to the second part of your question, I think it is also valid. There needs to be more and more homegrown venture capital firms, as you said. But you know what? It's still going to suffer from the same issue, because even when they're able to aggregate funds from angels, if those companies don't have a rapid growth model, they still will not receive those investments. So it's more of having, and this is why GFA, Get Funded, actually exists. What we're trying to do is over the next 5 years, move service companies or even hard tech product companies to become startups, such that they're then able to attract funding and have growth acceleration that impacts their communities.
add to that?
Yeah, sure. Everyone is going to add to this. I wanted to add to it, but let's just go in this.
I just wanted to add to that because I think it's a very important conversation in terms of how do we have more local participation in the funding, ecosystem, especially when you talked about the angel investors and things like that, like the family and friends. And the way I see it, we all know, whether you're talking about like Nigeria or like Kenya, there's a lot of people who tend to be older and they have money. But what they know how to do is to invest in two things. One is real estate, because they can see it, they can touch it, they can feel it, and you can't beat that. This startup that's in the cloud, what are you talking about, right? They also know how to invest in like trade, buy and sell. That's what they know. So it's going to be very difficult, and it's not going to happen overnight, for you to change the perspective and say, hey, put money in this startup. Now, what can change that? And I think that's what we should be talking about. I think the one thing that can change that is when they start seeing some exit or liquidity, right? So if the neighbor down the street made money from investing in Bunmi's company and, put $50,000, and by now, even if he didn't make the money cash, other investors came, the value is a lot more, and the guy is bragging to his friends or her friends. The conversation changes. So I feel like that's probably what we can start doing to change the conversation. So I'm putting the pressure back on the entrepreneurs, right? To say, hey, let's build businesses, let's give investors some exits or liquidity, or just growth, right? In terms of growth and momentum, and then the conversation will be flowing. And it is getting better, in fairness. It is going to get better, but we need that to, happen much faster.
Thank you. I think he said most of the things I wanted to say. Like, I think it goes back to the point where Bunmi had said earlier on, it can only get better when the people who are currently investing are seeing their returns. So think of someone who had put in money together to give a startup at 100K or part of a venture fund, and is bragging to his friend. You say, I was probably part of the pay stack and I got paid out or something. Now that the man who had money in his room that he wanted to use for trade, or he wanted to use it into real estate, is like, I think this makes sense, right? So I think back to his point, the pressure is pretty much back to the startup, that as the investment are being flooded into the continent, that we are, as a team, we're working together to see that those companies are getting successful. And the more they get successful, the more you're going to make opportunities available to people on the last mile. I think the last part of it was also what Debo said is, I think we easily confuse an SME to be a startup. And this one right here, I'll just toss it to Gerald, because the interesting thing is that Gerald manages the startup and the SME for the entire, for the Africa for Microsoft. So Gerald, what are your thoughts regarding regarding the question here she had asked?
So the only part I'd say, maybe I disagree with the panel, is I don't think it's an entire a problem to be solved by the startups, because there's a big player called the government that I think can also play a big role. And I say that because of the experiences of maybe in the UK. There was a particular framework which has been put in place for encouraging angel investment through tax incentives to individuals and to entities as well. So I think there's a big role for the government to play, but the government will not do that by themselves. They'll need all of us in the ecosystem, so the big corporates, startups as well, the investors as well, presenting the kind of incentives or regulatory changes that are required to allow that investment to be happening. So that's one part I would say. It's something for us to all play, but I think the government plays a big role in that. On the second question about startups versus SMEs, I think all startups are SMEs, but I don't think all SMEs are startups.
You think all startups are okay, thank you.
Yeah. You're totally right.
Yes.
Because all startups are SMEs, but not all SMEs are startups. Yeah. And once we get that right, we're then able to work towards migrating more and more SMEs
into
become startups.
Right.
And that is very important. And I did say earlier that the work Microsoft is doing is actually very important to the startup ecosystem and other corporate ventures as well, because that's what's going to create the opportunities for growth and even engagement with government. It is easier for a Microsoft to engage with a government than an individual startup.
Right.
And that's why,
Exactly, and that's a role we'll be taking seriously and taking forward. So when you talk about partners within Microsoft to help scale up and grow those 10,000 startups you're targeting, governments become a very key player, as do startups and the investor community as well.
Yeah. I know our time is almost up, but I did see your hand, so we'll just take on the question from him, and we'll wrap up.
Good afternoon, everyone. My name is Munachi. I just want to ask, why is it easier for African startups now to attract foreign capital? We have seen Busha raising from Jump and people like Yellow Card raising from Bella, and these people leading their rounds. Like, it's extremely difficult for African startups to even talk to African investors because they always feel like African investors wouldn't actually listen to them most times, or these African investors would only want to come in when a foreign investor is in. So that's one part of my question. The next part of my question is, where do we see the African capital markets going to? Is the future of every African tech startup to end up in the New York Stock Exchange? Because obviously that's not a sustainable strategy. So where do we see that going to as well?
Okay, yeah. I actually wanted to say Bunmi because you're an African investor.
All right, I mean, I can take that. I mean, I think the truth of the matter is that African investors are actually investing and the numbers are growing, So you have, Lofty Inc. I think they're doing lots of deals. You also have, TLCom, you have EcoVC, you have, so I think that number is increasing, but at the end of the day, African capital is still a function of the LPs behind them, right? It's still a function of the LPs behind it. Like, of course, you need to have competent managers, but then you need to have the actual source of the capital. Now, the source of the capital, unfortunately, is not Africa because, you don't have large enough pension funds. The pension funds regulations are not there. You don't have endowments in terms of college endowment. So you also don't have a lot of successful kind of billion-dollar entrepreneurs that could be LPs to fund managers. So if you see that value chain, something is broken there, and until that piece gets fixed, so people like you guys, Yellow Cards, so when you make a lot of money and, you become an LP, you give that to a VC firm, then there will be a lot more local capital. So I think that's the root cause, of the challenge. And how is it going to change? For me, it's either going to change because there will be some massive pension fund reforms that will happen at some point, government. I won't hold my breath, but maybe. The second path is for a lot of global LPs to say they want to back African GPs. We'll see. The third part is also in terms of African entrepreneurs who have had $100 million, billion-dollar exits personally. Then nobody tells them where to allocate their money. I actually think that's the more likely path to liquidity and Africa VC funding, in my opinion. And then on the second question, in terms of the capital markets, I think that one we're very far. Unfortunately, we're very far. I mean, to be honest, I think most of the exchanges in Africa, all of the exchanges in Africa are probably, I don't know if I'm allowed to use the right words here, but they're not alive, when it comes down to it. Because if you look at whether it's Johannesburg Stock Exchange or Nigeria Stock Exchange or Nairobi Stock, there is nothing happening, really, to be honest. So for them to go from there to a point where they have an understanding of this new asset class, they tweak some of their structures so that African companies can actually, tech companies can actually list, I think the journey is far. I don't see it anytime soon. So I wish I had better news.
But I don't think that situation is a negative situation for the companies that I want to exit, because there's a lot of money anyway for exit. You don't have to go through listing or IPOing within Africa. So it's a big challenge to solve, but it's not a problem that will stop startups exiting.
So you mean they could do secondaries,
Exactly,
trade sales,
exactly.
without necessary IPO as a part?
Yeah. Exactly.
Yeah, I
Exactly.
agree with you.
Just talking on the part of the exchanges, it's interesting to note that in the most active African exchanges, on average, 60% of the investors in those exchanges are foreign. So I think the biggest exchanges are the Johannesburg Exchange, the Lagos Nigerian Exchange, and the Cairo exchanges. On average, 60% of the investors in those exchanges are actually foreign. But coming away from that, I think going back to kind of like the point Bunmi raised earlier on, it's that you have to realize who is funding the VCs, because venture capital firms are like an offshoot of private equity. So they invest in ventures, riskier assets. Who funds them? Globally, you're talking of pension funds, you're talking of endowments, and you're talking of founders. Typically founders that have raised large amounts of money. So for example, the likes of Bill Gates or I was going to...
You can say it.
Okay, I'll keep that there. And several others. And so if you flip back, so for us, for example, recently we realized that in our consortium of VCs, we're beginning to have more and more founders that are setting up their own VC firms, sort of, based on exits. A very good example is this gentleman, Aboyeji, who was one of the founders of Flutterwave, and by extension, another company, Andela, that he also helped set up and co-found. And now he runs Future Africa. And so we're now seeing that we probably need to work on a program or a project of founders, fueling founders, because that then helps them guide more startups and help fund more local startups using local capital. The other parts in terms of the pensions and the endowment, for the pensions, I think it's very important that there's some regulations. So currently, the two biggest countries with the largest amounts in terms of pension are South Africa and Nigeria. The funny thing, both of them currently, with the current laws, those pension funds are not allowed to invest in startups. So there needs to be a change in those regulations for them to have some percentage to actually invest in the startups that are going to revamp those individual economies. Right. And which is why these startup bills and all what have you that are popping up here and there are very important. And then for endowments, the universities need to do more. They have large alumni, and these large alumni can do much, much more than what currently exists.
Thank you. I think in closing, I would just really head over to Sam to what if there's that one thing you wanted a startup or an ecosystem player here to take away with regarding our conversation, which has been focused primarily on funding and market expansion. What will that be?
I think what might add value is maybe, again, coming back to her question and the first part of the gentleman's question in a holistic way. We've talked about sort of as companies come into the VC world and then what's going on all the way until potentially the capital markets. But I just wanted maybe to give an example of what also entrepreneurs can do to help create these funds to come to them at the very early stages, because I think that is really still missing. And as a lot of people have alluded, the solution is really within Africa. The capital is available at those small levels. So I think, for instance, in our case, we are raising right now, but what we have found worked in the early days was educating a bricks and mortar investor, somebody who is investing in property, has some spare cash, starting with a very breakdown of what is the difference between an SME and a startup and why we are not an SME. In my case, I actually broke it down to my very first investor. He was a big property developer, still is. And the way I cracked through to him was not to explain what the solution does in detail, was to say, look, people are going to be paying a SaaS fee, and it's going to be recurring monthly revenue, and there's no limitation. So can you imagine building a building with unlimited apartments of unlimited ranges of sizes
of rentals
yes. every month, and doesn't matter, we can fill 10 people, 100 people, 1,000 people, 100,000 people.
Across different part of the world.
Yes, and your build cost will not go up. Yeah, and it was like, okay, finally that sort of clicked, and it was like, let's try. Now, a couple of years later, as we are raising now, some of the investors we are talking to talk about cleaning the cap table a bit. So even though we've not reached an exit, he starts realizing, wow, and I'm being offered how much for this investment? If I'm to exit exit partially or whatever at the moment. So that becomes tangible, and obviously just taking this one investor, we did this with quite a few angels, but this same person over the years has grown and has a lot more expendable finances now. So they actually said to me, we are actually thinking as a family to diversify our portfolio and start investing in tech. So I'm the one essentially who introduced them to this, and they have seen a path to an exit, and they are now thinking, and therefore 10 or a few other companies are certainly going to benefit. So I think we also have a part to play in that hand holding. As Bunmi said, don't get tired, you know, you're wearing different hats every day. At some stage it will get easier. But eventually we should have enough local participants to be able at least to get companies, especially off the starting block in the seed stage, before the VCs can come in.
Thank you. I love that perspective of just breaking it down from a real estate to what a SaaS offering is in tech. Thank you. Gerald, what would be that last thing you want to say to any ecosystem player here regarding funding or market expansion as we close up the panel?
Sorry, did you say it? I didn't hear that.
I was saying, what is that one last thing you want to say to a startup or to an ecosystem player that is present right now?
Okay.
As we close up on the panel.
Okay, thank you very much. I think the thing I would say is we've got a Founders Hub in Microsoft, which is open up to all startups across the world, and you get access to everything we've spoken about here. Access to mentorship, access to financing, and access to work with Microsoft's customers as part of your first market as well. So Founders Hub will be a big platform we'll be working with across the world to access the startup ecosystem and work with them and help them scale up.
Right. Thank you. Bunmi, I'll take you last. Is it Debo?
I think that just final words, there's so many ecosystems that are out there today and that are helping startups. So if I can just put in a Microsoft plug, it's startups.microsoft.com, I believe. Because I've gone through what is being done for founders, and I think it's amazing and it's awesome that, you know, there's something that you can literally plug into and helps across the entire ecosystem and all. So that would just be kind of like, there's several platforms like GetFundedAfrica.com as well, which divided it early stage, later stage, you know, and other full suite of venture services that one can offer. I think this is important and great to have Bunmi here as well, and the entire team. Lots of things happening on the African continent and lots to look forward to.
Thank you. Bunmi, you want to sort of just close up and round us over?
Sure. No, thank you. I think a lot of, you know, and thanks to my colleagues on the panel, but the first message for me is that, you know, to entrepreneurs, keep building. This is the time. There's so many problems to solve in Africa. Keep building and the value will come. My second message is also to entrepreneurs to say that if you guys build so successfully, money will come and you will have your big, you know, family office and you will be the one solving the problems around local capital, right? So I'd rather bet and bank on the founders here than to bank on the pension funds changing their law, or to bank on the exchanges to modernize and allow people to IPO. I think we just got to start building. We have to start building, and it's just all about Africans solving Africans' problems. It's really about founders backing other founders. That's how we unlock the incredible opportunity. But the momentum is here, you know. This year, most likely $8 billion, $10 billion will come on the continent. So just build, and you take a chunk of it and build your wealth. And then afterwards, bring it to me to manage it for you. Thank you.
I love it. But thank you everyone. We're with the Microsoft team. We're present on ground. Feel free to stop any of us. Anybody would say with Microsoft, you can stop and talk to them about it, and we would definitely sort of just attend to everyone. But we do have a lot of amazing opportunities available in the continent for everyone. We have loads of value proposition, a lot of which Gerald has talked on, and we can have one-on-one type conversation with as many of you that way. But thank you. I did enjoy every bit of the session. Thank you to our panelists. Thank you.